Money feels instant today. Paychecks arrive digitally, and bills are paid with a tap.
But behind that simplicity is a system designed for trust, not speed.
Every business day, trillions move between banks, governments, and major institutions.
Not through apps or cards, but through payment rails most people never see.
These systems exist to prevent failure, not to impress. This is the infrastructure that makes modern finance possible.
To understand money movement, we step away from consumer banking entirely.
We look instead at the systems banks rely on themselves. Systems like SWIFT, Fedwire, and CHAPS. They are legally structured networks built to keep global finance functioning. This is how the payment rails that move trillions actually work. Historically, banks settled payments physically, using paper and precious metals.
As economies expanded, those methods quickly became unworkable.
Governments and central banks designed regulated settlement systems to manage risk. Payment rails are not shortcuts. They are safety mechanisms.
They ensure payments are final, verifiable, and legally recognized.
Messaging and settlement are different functions in financial systems.
SWIFT handles messaging. Fedwire and CAPS handle settlement.
SWIFT provides a standardized language banks use to communicate.
These systems support businesses, governments, and everyday economic activity.
Money is a promise enforced by systems and institutions.
The most important systems work quietly, moving trillions without being seen.
Large institutions cannot operate on trust alone.
When banks move large sums, they are settling obligations.
Each transaction must be final, verifiable, and legally recognized.
In the past, banks settled payments using physical assets. Paper ledgers were reconciled manually, line by line.
No single institution could manage that risk alone. These systems reduce risk and enforce financial rules.
Governments responded by designing regulated settlement systems.
Governments responded by designing regulated settlement systems. These systems reduce risk and enforce financial rules.
They create certainty between institutions that may never interact again.
Payment rails are safety mechanisms, not shortcuts.
They ensure payments are final, not pending.
Messaging and settlement serve different purposes.
Messaging systems transmit instructions.
Settlement systems move actual funds. Each plays a distinct role in global finance. SWIFT is a global financial messaging network. It does not hold or move money.
It sends standardized instructions between banks.
A bank in New York communicates with one in Frankfurt.
Instructions are authenticated and globally recognized.
SWIFT reduces error, delay, and misunderstanding.
International payments often pass through intermediary banks.
Each step introduces additional risk.
SWIFT creates permanent, auditable records.
But SWIFT does not complete the payment.
In the United States, settlement happens through Fedwire.
Fedwire is a real-time gross settlement system.
Payments settle instantly and irrevocably. There is no batching and no delay.
Fedwire supports corporate and treasury transactions.
It is essential. A gopher for Grundfenster and government and interbank obligations.
Central bank settlement reduces systemic risk.